Hello, everyone. Happy Saturday. Today, the markets are closed, and right now we can see that the portfolio, at least this is yesterday's statistics, the portfolio is up $131. Let's take a look at what the portfolio has been doing throughout the week. I'm up 0.23%, $55. For the past month, I am up $1,288, so up 5%. Portfolio doing nicely there. And in past 3 months, I am up 3%, $742. So let's quickly get into the portfolio, guys. No kidding around here. It's got a load, and there it is. We can see that Apple has been going up a little bit. 198. Let's take a look at my position. Shares 10, average cost still 179.76. Total return of $183. It's still up 10%. You guys know I like Apple a lot. I'm probably going to buy some more shares of Apple. If it gets down to like around that $150 buying point, that's where I want to buy some more Apple. But pretty solid return on Apple, and I just hope it continues to go up from there. So quickly going through the portfolio here, 3M starting to recover a little bit. They had a nasty correction some time back. You guys can see what the graph is doing. Got all the way up to about April 29th, 2019, and then it had that tremendous spike down because of bad earnings reports and the trading wars not been helping the stock. My position, I did buy into the low here. Average cost 165, and I'm starting to see some nice capital appreciation with 3M of 4% on them. I'm sitting at a 3.5 dividend yield, and I just like how it provides diversity amongst industrials for my portfolio. That's the reason why I bought 3M while they were on sale. I could have got this company at $160, but I decided to buy at 165 just to lock in that 3.5 dividend yield. So I thought that was a good buy there. Let's take a look at Johnson & Johnson, 139.28. I am down to this is not set down today. I'm down. I was down yesterday, 1.1%. So shares 10, average cost 139.27. Right now I'm only up 10 cents. So portfolio diversity 5.74, that's 5%. And this is a company I just bought them because I just like them a lot. This company was not on sale when I bought it. It was just at a buying point that I just I wanted the stock into my portfolio because I like Johnson & Johnson a lot. Dividend king, pretty good dividend still, PE ratio quite high, but I like them. I just like this company so much, and I'm gonna continue to hold. Take a look at Pfizer. This is another company that I've sort of become bullish on. $43. 50 shares on them. Average cost $39.89. Total return $173. So I'm killing it with Pfizer. And at one point, I think this guy all the way up to like $44. Yeah. So around June 21st, early morning, it got up all the way to $44.18. So I was up $200 with Pfizer, and I continue to think that this company should do well. I know there was another pharmaceutical, AbbVie, that I want to just quickly discuss here. So let's just pull it up. It's got to load. Just waiting for it to load. My phone is slow. Okay, there it is. AbbVie had a nasty dip. I think they had a company. They acquired some company, and it increased their debt load. And a lot of stock market didn't like that, so it sold all the way down to $65. I'm not buying this company, guys, because I already have some of this, and I have fractional shares in my M1 Finance account. But I just think that I don't want to take on that unnecessary risk, and it's starting to actually go back up. So that would have been a great investment just to buy at that $65 mark, and then be sitting on a pretty good dividend. I think it was around 7 or 6% or something like that. But AbbVie, I'm not buying them because I already have some good quality healthcare companies. Johnson & Johnson and Pfizer pretty much handles all my healthcare needs, and I just don't see the point of buying this company. I love how companies are go on sale, and I like to buy when companies are on sale. But for me, this is just it's just a move that I think that AbbVie made just to be making it, and there's a lot of unnecessary risks that I would take on by holding this stock. I don't know if there's a looming recession ahead. I don't know how this stock will perform during a recession, but it's probably a good time to buy if you need to own a healthcare stock. I have plenty of healthcare stocks in my portfolio, so I'm not going to be buying them. But anyway, Pfizer looking pretty good. Take a look at Enbridge. Oh wait, I already clicked on Pfizer there. Enbridge was actually doing very solid. It's up pretty nicely here, 36.08. My position $34 and total return $79. So I'm really killing it with Airbridge. I hope it continues to go up. Portfolio diversity 7% and pretty good dividend yield on them. I like this company for its diversification in Canadian energy, and it's really cheap. I still think that this company has some. It's like sort of some undervalued play. I know the PE ratio is not where I really want to buy it at. I like to buy when PE ratio is around 15 times earnings or so. But 23 for a company like this, pretty. I think it's a pretty good buy. I still think it's time to get in. Could probably be overvalued around that $43 mark. So it'll be interesting to see how that plays out. AT&T 33.52. My cost 32.55. This is I bought right back into AT&T and it continues to go up. And this is the reason why I bought back in because 5G is coming out. Everybody has a cell phone. Everybody is looking forward to getting that 5G into their cell phones. And I'm up $97. So up 2% on AT&T. I have 100 shares and it's going to pay me a $50 dividend. And I think the PE ratio is still respectable. It's only around 12% PE ratio, 12.53, huge market cap. Dividend yield appears to be pretty safe still. I like this company. I really do. That's why I bought them back and put them back into the portfolio. Amazon, $1,889. Not a good day for Amazon. It's been going down a little bit, and then it's been going up, and then down, and then up. This is a company that provides the portfolio some growth opportunities. I don't want to just be all about the dividends. You guys know I love dividends, but I don't want to go too crazy with compounding my dividends because that is taxable income. So if I keep getting dividends, I'm going to be taxed a lot because dividends are taxed. So I do need some growers in the portfolio, and I thought Amazon would be a good choice. Huge retailer giant, pretty much dominates the entire North America with its retail, and it's just taking out other businesses. It's starting up its own mailing service. They're just doing everything. They're rocking on all cylinders, and Jeff Bezos will continue to monopolize Amazon. So I'm up $22 on them. Let's take a look at Disney. Disney was the only company that I did buy some more of, 139. So now 15 shares of Disney. Average cost still 139.58. You guys know that I sold Altria to buy some more Disney because Disney was trading at 15 times earnings, and I definitely I definitely think that Disney has a lot more room to go up from here. I think this stock is probably worth $175, but again, do your own due diligence on that. Total return, I'm only at $4. I just recently bought this, so I'm not expecting any capital appreciation, anytime soon. But I got rid of Altria, and I just want to take a look at where Altria is sitting at right now. I think it actually went lower. I sold it around 50, and now it's at 47. So that looked like a pretty good move to get out of Altria, and it's actually starting to get around to my buying opportunity point where I said in the last video, I think it was on one of the M1 Finance account videos, that I wanted to buy Altria or had a buy-in opportunity for Altria around $45 or so, $46, but I sold around $50, and I did take a loss, but I am going to get a dividend. Did I actually sell around $50? Let me just pull it up here. So yeah, I did sell Altria around $50, and it's still going down. And right now, you guys can see that this dividend yield, the amount that I'm gonna get paid, total amount $40, allowed me to exit the stock. I did take a big loss with Altria, but the dividend yield will help me out, give me $40 back. So pretty interesting to see that Altria continued to dip, and I got out of Altria and I bought Disney, so thought that was a pretty good move. VTI, Vanguard Total Stock Market ETF, $150. My average cost is 25 shares at 121.67. You guys know that I sold some stocks. I sold some ETFs. For VTI, some shares of VTI, so 25 shares because it was a huge chunk of my portfolio, and now it's only 15% of my portfolio, and the total return is up $710. So this will probably be a forever hold. The reason why I sold is because it was just too much portfolio diversity from my portfolio. It was like 30%. It was a huge chunk of the portfolio, and I thought that was okay because it's an ETF, so it's a broad market ETF that's just focused on everything, that's invested in a lot of companies. But I still, at the end of the day, I'm like, yeah, I don't want that. I don't want to have like 30% of all of my equity sitting into one place. I like to be diversified. I like to be spread out evenly, and I'm okay with this being a 15% portfolio diversity for an ETF like Vanguard Total Stock Market ETF. So I'm still killing it with this ETF. I think that's a good choice. That was a good move to do that. And SPHD, Power Shares S&P 500, low volatility, high dividend ETF. Nothing was sold, nothing was done with this ETF. 100 shares, 38.58, and portfolio diversity even just a little bit higher than VTI. But what you get with this ETF is some good defensive utilities in here, and opportunity for compounding that dividend with the high real estate companies. So pretty big on utilities and real estate, and it pays a 30% expense ratio, which is quite high. But this is one of the rare ETFs that pays that monthly dividend that I was talking about, guys. And you guys already know that I love dividends, and I don't want to go too crazy with dividends. But when I see stuff like this is just absolutely incredible. I got another dividend. This is another $15 payout. So June 28, 2019, $15, and then you see May 2019. $15, April 14, dividend yield for March was 14. So this dividend yield is slightly increasing actually, and for an ETF that's very rare. And I would say it's rare and it's odd that this ETF continues to raise its dividend, because normally ETFs, when they pay a dividend, it's really just all over the place. Like VTI paid me 77 cents for 1 month, and then like recently I got paid 55 cents. But this ETF is a rarity that it actually has been increasing its dividend over time. So I think that's another reason why the YouTube community loves this ETF so much. And I'm really up on this ETF, like total return $352. And if you factor in all the dividends, I'm probably up some $400 with this ETF. Absolutely insane capital appreciation and dividends that I'm getting out of this ETF just by buying and holding it. So if it gets down to my average cost, I'm more than likely going to buy some more, maybe like another 50 shares of SPHD. Interesting to see. So, and that's going to do it for a portfolio, guys. I was looking at this portfolio the other day, and I can honestly say that this might be one of the best portfolios I have put together in quite some time. I have a lot of videos on YouTube now. I was the other day I was just looking at my how many videos I have, and I have like 100 videos, which to me is shocking, because it feels like I haven't really been making all that many videos. But I was looking at just like how my portfolios were just set up back then, and just me learning, and me sometimes I'll be like, I got to get out of this stock, I got to sell because the market's going down, or I feel like I need to own some growth companies, just a lot of stuff. But now I'm looking at this portfolio, and I just like it. Everything is balanced out. Everything is smooth. Apple looks good. Great, the best technology stock on the market. 3M, dividend aristocrat, dividend king, whatever. Same thing with Johnson & Johnson. Pfizer gives me defense. AT&T, 5G's coming out. I like that play there. Amazon. I think every portfolio will love Amazon. I've been buying up Disney lately. I know it's kind of too late for this stock, but again, if you just look at the metrics with the company, due diligence, movies, streaming, they're buying up all the streaming services, the theme parks, summertime, it's just everything. Just this portfolio is just so nice to me, and I just think that this is one of the best portfolios I have put together. And probably, like from when I was just doing all these videos, this is probably the best portfolio that I have accumulated. But SPHD had 100 shares down there. Guys. $24,496. Portfolio still been rocking it. For the year, I am up 7%. I could be doing better, but I think that's not terrible. I think 7% is very respectable in that regard, and that's gonna do it for the video, guys. I hope you guys have a great day, and I'll see you guys next time.